This is the 11 of Forex on the record. Good evening, your host Kyle Nero here. Why on the record? Simply because 90% out there offering some sort of Forex service is scamming people with unrealistic returns and lifestyles, leading people to believe in a get-rich-quick opportunity. First things first, today in the markets anything can happen. I don't need to know what's going to happen to be successful. There's a random distribution between wins and losses for any given set of variables that defines an edge. An edge is nothing more than a higher probability of one thing happening over another. And every moment in the market today is unique. Today I'll be successful in the market because I will objectively identify my edges. I will predefine the risk of every trade. I will fully accept that risk, or I'm willing to let go of that trade. I will act on my edges without hesitation or reservation. I will pay myself as the market makes money available to me. I will continuously monitor my susceptibility for making errors, and I understand the absolute necessity of these principles of continued success, and therefore I never violate them. I trade my system, I stay the F out of the way, and I repeat. Good evening. I hope you had a lovely weekend. We are on the record here on this Monday evening, and let's do our usual activities by heading over to our trusty calendar over at Forex Factory. Today is the 7th of November, and heading over to tomorrow, we'll just want to look at what news events might be coming ahead that might disrupt our trade or prevent us from taking a trade. So as we scroll down the list, there's a bit of a red flag here that we look out for, but that is not something that we really mind or take note of. If you're on the lower time frame, that's definitely something we look out for, but not so much on the daily time frame here, where things are much more simpler. However, tomorrow though is a USD event that is coming up in the form of congressional elections. So this is definitely one of those events. This calendar is handy. You can check over here, just click on the folder. We'll see when the last happening was about it, what it's about, etc. Just a bit of a breakdown. So the frequency of this thing is every 2 years. The last was November 3rd, 2020, and I went back on my charts just to have a look, because it's not a normal event, just what kind of volatility was happening in the markets back then, and it's definitely something that I don't want to partake of or be in the markets when this result is being brought through. So we will unfortunately stay out of the markets today. There was a couple of trades that was a possibility, so let's head over there right now and just check how things are standing. So there's not been much change for 4 or 5 days now. Our balance is at $108,484. Our equity is the same, and as always we're just going to our history here to just show you all that there's nothing that has been added in between or changed to falsify this record. So the same positions is still there that we've opened, and there's no difference where that is concerned. And then let's just head back to the screen and have a look at that positions that I said might become of an option. The one was on gold, so I would have definitely taken a gold entry tonight that had not been for the congressional elections coming tomorrow. And then as well as on USD JPY. Now this one is definitely one of those that you definitely want to stay out. There's just always so much crazy volatility with this pair that it's just best for you to stay away. So those are the two pairs that we'll rather omit. We won't be taking part in any of that. And so that's it for this Monday evening. There's nothing else that we can do. So getting over to our main question out in the thumbnail, it would read as, do you trade the stock market? So this week our theme will be around the different markets that we trade, essentially. Week one, first week that I started this thing, would have been around money management. Week 2 was around psychology in the Forex market. And this week our theme would be around the actual markets that we trade and what it is that we partake in. There's of course so many markets out there in the world, in our land, in our country, that where opportunities exist. So we primarily focus on the international markets, and today being the first one that we'll cover will be the stock market and in particular stock indices. So there is a difference there, and growing up watching the news, you'd have seen the Dow being televised, on the later, how can I say, on the financial reporting of the news. First thing that comes to mind is Rian Kruiwagen, that's his name, I think, and he's busy in that newsroom, talking about what the market's done for the day. And it seems so boring when you were younger. That's definitely the part of the news, because you were forced to watch the news with whomever is in the house, your parents, grandparents. But that's the part that you run out, to go and fill up water or whatever, because it was just not interesting. And today, guess what? Now it's right here in our faces in my life. So welcome. Dow industrial average is one of them. Is the US 30, and we got the S&P 500, the Nasdaq 100, the DAX, and France 40 is in there, the CAC, the FTSE, the Nikkei, the Australia 200. So those are the main stock indices that we trade. And just to give you a small bit of a breakdown what it essentially is. So the US 30 is the Dow Jones, and that makes up 30 of the largest companies out in America. The S&P 500, also based in America, makes up the 500 largest companies in America, as well as the Nasdaq makes up the 100 out in America. So there's 3 major stock indexes there, just coming from one country, which is a powerhouse of the world where it comes to the dollar. And then moving on over to the Eurozone, we got the DAX, the German 30. So not far off is the US 30, the German 30. And we got out in France, in Europe, also the France 40, which is also known as the CAC. And then also out in London, there's the FTSE 100. And then further to the east is the Nikkei. And down under in Australia is the Aussie 200. Now there's some others also here there's some other big ones that we don't really focus on here. Is the Nifty out in India, and the Euro 50 is also one of them. But these things become so closely tied to each other that I've just found that my diversified portfolio is best suited with these guys that are here. So maybe these that I've just mentioned won't make sense to you, or you won't know it, but as soon as you break it down and you actually see what they are and what they comprise of, then it's definitely, it gets closer to home, and you begin to understand who it is that you're dealing with. And this is, for example, the Dow, the top 30 major stocks out in the USA. So this is what's made up of: Goldman Sachs, that's a bank; McDonald's, Walt Disney, Visa, Coca-Cola, Microsoft, I see here, Cisco, Intel, Nike, Walmart, Caterpillar, P&G, Johnson & Johnson, American Express, the Home Depot, Apple, IBM, so all popular brands and names that we deal with, that we have in our life and on a daily basis. McDonald's we see every day, Coca-Cola we see every day, Windows, Microsoft we see every day, Visa we swipe every day, so all constant brands that you don't realize what they are until you get into this game. And just moving over to some of the others, this is now the S&P. So many of what is in the Dow and in the Nasdaq also exist across the board between these 3. So Amazon again is in the S&P. I'm just now talking about the major guys, So Apple, Microsoft, Facebook, Google is in there, Netflix, Visa, Coca-Cola. So a lot of the very popular brand names that you know. Out in on the DAX, you've got Volkswagen in there, SAP, that's one of the previous businesses that I worked for, that we had that operating system. BMW is in there, you know, so very, very Continental, Deutsche Bank. So there's a lot of banks and financial houses and these big brands that we've all become accustomed to. Out in the FTSE again, who do we have here? We have Shell in there, that's a popular name. BP, British American Tobacco. So those are the guys that makes up the stock indices. And when you're trading, and my question in the thumbnail is, do you trade the stock market? So you know, each one of these has their own individual company, so they have their own individual shares. But this is what makes the stock index great. What of all these three that I mentioned, five that I mentioned now: the US 30, the S&P 500, the Nasdaq, the FTSE 100, and the DAX. You know, and the CAC. These all have, how can I say, it's all a stock index. So they house these individual companies. But for you, for example, if you wanted to go invest in Apple, and you put your money on there, if Apple goes crazy and you know something like happens, like Steve Jobs died, or there's a major new iPhone 20 that comes out, you know, these are all news events that impacts the market almost immediately. And because of the news event specific to that company, it causes a disruption. Now, if you're going to cause that disruption and you're putting that Apple in the basket of 30 other companies, all of a sudden that disruption isn't as big as you thought, as if you were only trading Apple individually. So, you know, the chances of your stop loss being hit or things just going crazy where price is concerned, it becomes so much less, because now you're not only counting on one person, you are counting on the group, and the group collectively almost balances out the price, if you understand what I'm saying. So, you know, the way I trade, the way we trade is based on this format. We rather focus on a stock index where there's much less disruption. That 1 out of the 30 for the Dow Jones, for example, doesn't affect the whole bunch. 1 out of the S&P 500 doesn't affect the whole bunch. So it's a more safer bet. And even though it is safer, doesn't mean this thing doesn't come without volume. These guys are moving all of the time, consistent movement, which is really great to trade. And you'll always see out there when people is advertising these forex things and services and signals, the main one that you'll see come up is the Nasdaq, the NAS 100. You know, I spoke about it the other night. There was one thing that was called the Nasdaq Ghost, you know, and the NAS bot, and everything was with the Nasdaq, because this thing moves so frequently. There's always volume in this market for things to be moving, and that's what traders enjoy, and that's why they focus on there and put their attention on there. Because if you're going to look at it from a different perspective, at AUD CAD, for example, you know, this thing, I know it might look like the same chart, but they don't move the same. And as I'm comparing it to the Nasdaq now, they don't move the same. But for me, it's no different. You know, people will be selling signals out there, and they're selling the Dow. They're giving a signal to, you know, I must either buy or sell on the Dow, must either buy or sell on the S&P, must either buy or sell on the Nasdaq. And these things, because they house all the same companies, most of the time they are moving exactly the same. So you're not diversifying, you're not, you know, splitting your risk. For me, it is no different from getting a trade on NAS 100, for example, against AUD CAD, because my risk remains the same. I don't change my risk between NAS 100 and AUD CAD. because the other one is sexier and it moves. No, it doesn't work that way. If an opportunity exists on AUDCAD and on NAS, then I'm happy for that, because now it's two instruments in two totally different baskets, and that is what it means for me by diversifying. There's nothing with Facebook got to do with the AUDCAD. There's nothing with Apple or IBM or Hewlett Packard to do with the AUDCAD. They are far apart. So I can fully put my 2% on here on the AUDCAD when buying or selling, and fully put my 2%, having the confidence that these things will move in opposite directions. It will move on their own individual characteristics, if I can call it as such. So it was just a mini breakdown of what it is, and if you sign up to our services, what we'll be covering in the markets that we'll be looking at. And this is the one part of it on stock indices. So thank you for joining me this evening. Hope you found this video helpful, and please tune in, and we look forward to the results that's coming ahead. Thank you. Bye bye.